Coming into the notes, gonna try and make it quick, simple, and easy. Right? We see why key levels fail is why you fail when trying to turtle soup and how you fix it. Like always, we're gonna go with the top down when, why, and where analysis with a narrative. Obviously, when, why, where is the narrative. Continuing on, what time are you trading on the monthly, weekly, and daily chart? And do we have a strong weekly profile? What is institutional order flow showing us? Obvious high time frame order flow, is it bullish or bearish? We're obviously bullish, and I know it's, we gotta have a top, I want a short, but if the market's gonna show you that it's continuing higher, Tuesday and Wednesday, we continued higher. Where are we within the high time frame range and within the low time frame range for a discount low time frame range trade like we had on Wednesday, like we'll show at the end of the video. You can't always dig into a deep discount if, we're not going to reach a deep discount. So you have to understand when, why, and where we don't reach into a deep discount to deliver on what day of the week. We're going to look at a great instance of this on Wednesday of this week. Obviously, with all of this, you have to understand where is the liquidity engineered, where are we going to drive to, and where are we going to take the path of least resistance to. There's not really a super big high time frame market maker model. We're forming the smart money reversal of one now if we are going to reverse, and or just create, if we're going to keep creating equal highs, we'll be prepared for it, and either take a couple break even or small losses days, even if we are wrong, and then understand when and how we're going to deliver and be able to easily make back those. How we trade, I'm going to post a video where can I take 20 losses and still be profitable? And it's going to say yes every single time. Is there a high time frame smart money divergence? And I want to stop right there. I don't look to take losses, obviously. I mean, nobody looks to take losses, but you're going to be wrong some days of the week. And if you are wrong, you have to be able to mitigate those losses and be able to keep them super, super small. I try and do that the most efficient way possible, and that's with a 30-20 tick stop. Is there a high time frame divergence? Noting all of our open high low closes, open low high closes, understanding where our turtle soups form at bullish breakers when bearish, and bearish breakers when bullish. You can even turtle soup without looking at PDAs and just using time, as we'll see with the 8:30 Judas swing in Wednesday's trade. It wasn't a perfect time-based soup, but you'll also see delivering from a time-based high resistance low why we didn't keep running lower to a time-based Asia and London low that had equal lows. I don't even need to say it out loud because I feel like I've said these 5 key things, but it's the most important part of why your PDAs are failing. Your PDA is going to fail if there's not a draw on liquidity, if the draw on liquidity is higher or lower than the PDA you're trying to soup and or use as such an order block. If we have a high time frame or high probability SMT, such as having a high time frame fair value gap in your eyes. If we have an SMT, we're not always going to need to run if the draw on liquidity is lower and we're just manipulating higher to then deliver lower. If you have the wrong narrative thinking, which I know can be sometimes biased, but understanding the teaching, you'll have the same narrative thinking as 100 people have in the Discord. There's no way 100 people think the same if the narrative doesn't have somewhat of a just look at the chart and kind of tell, using all of this, it lines up with your narrative thinking, and if everything doesn't line up, you don't take a trade. It doesn't, you can get analysis paralysis, but if you really understand the concepts and what we've been taught from ICT himself, you can understand, when a trade would fail, how it fails, and how you can fix it for the next time. Draws on liquidity are time-based and will only be met under certain conditions. News conditions feed directly into the high time frame order flow, and understanding news events help understand which events are manipulation and which ones are distribution. SMTs allow, after confirmed key levels, to sometimes not be hit directly. Time-based ranges also allow these levels not to be swept aggressively. Fair value gaps also fair value gaps past the high-low for a real entrapment in turtle soup. Instead, you can see a wick below or above an old range, maybe into a high time frame fair value gap into our reversal. Chart time allows you to be fully confident in your time-based ranges because they will not always look like a pattern. London sweep, and obviously this is just a pattern that you can see, right? London sweeping Asia high or low into a New York distribution into a London high-low classic buy or sell day. Only use order blocks, rejection blocks, breaker blocks, and obvious fair value gaps after reaccumulations while anticipating an SMT on the weaker pair confirmed by a CSID after sweeping the range high or low into a high time frame PD array. Not many more notes because this, if you've kept up with every video, and not even if you've kept up with that every video, if you understand the concepts put in front of you and how to, combine them and layer them on top of each other, you could damn near find a perfect win rate strategy. We'll go over how I was able to put this into place into the weekly trade, or not the weekly, but to the Wednesday trade of the week, and how we caught it live in the Discord. We'll get into that now. Hopping onto the chart here, I wanted to go over the trade that we took on Wednesday of this week, anticipating a weekly profile of either a midweek reversal and expecting CPI to induce that reversal. Coming in, we see that Monday put in our low with an SMT driving us higher, and Tuesday also respecting that low put in and driving us higher. With that Tuesday low put in and driving us higher into Wednesday, we can kind of put some of the makeup on the chart here and zoom in a bit. We've seen our higher time frame on the 4-hour. We know on the weekly and the monthly where we're at. We have our Forex factory in mind, so we're going to zoom into the hourly here. And we're also going to zoom back to the time that we took the trade, right, live in the Discord. We took it within the 9 a.m. hourly candle, anticipating, right, our 4-hour to expand. We drop down to the 15-minute, and we also see our hourly order block, right, with our low put in. Also, we see on the 2-hour, right, it is the low of the 6 a.m. candle. So we zoom in a bit more to the 15-minute. We see in London we've SMT'd, right, our Asian open, SMT'd, as well as SMT'd into our London reversal. So we anticipate a New York expansion. Coming into pre-market, right, we come into the time where we normally take a trade into the 8 candle, and we see that we started to accumulate. So what do we usually expect after accumulation and this close to our draw on liquidity? Understanding, right, with our market maker model here, an accumulation, manipulation, distribution as well. So we should expect 8 a.m. to accumulate, come into a 9:30 manipulation lower to then drive us higher, with our obvious hourly fair value gap resting below here. We drive just a little bit deeper to the 5-minute, and we notice we do have a very long wick, and it wasn't the most beautiful delivery in the world, right, because we did leave these equal lows that we then come run lower and then expand for our 10 a.m. Open, low, high, close. So we weren't able to catch the whole daily range with this manipulation lower. Just not one of those days, but we were able to catch this low to our draw on liquidity, obvious equal highs, resting liquidity above as well with previous day high. So we zoom into the 1-minute. Our key level here, as we've stated, is the 1-hour fair value gap, 1-hour order block. We only like to look for order blocks, rejection blocks, breakers, or obvious fair value gaps. To me, right, the 2-hour fair value gap was obvious inside of the 1-hour order block. If we did sweep this low, right, within the 1-minute candle, it would have been fine because, right, all I was looking for is after we swept this low, right, just for a closure back within the range, understanding, right, especially in sometimes in such a volatile market, right, after seeing the SMT, you don't need to be perfect on here. You just have to have an understanding of when, right, even down to your 1-minute low resistant, your high resistance low is put in, and then you can be able to catch your reversal from there. If we go inside the 15-second, which I don't, right, always recommend, but we do see with inside of our 1-minute closure here into the, right, 339 candle, we have a entry right back into our order block, as well as the 15-second candle wicking and closing back within. And it's not beautiful here, but it does have a long wick, rejection block-esque, and then as we reject from it, right, beautiful reaction on the 15-second inside of our 1-minute, right, close back within the range, as well as our 5-minute close back within the range, anticipating that, and then, right, with our 3-candle model playing out here with our 1 accumulation, right, from the accumulation range here, right, so this makes this the accumulation, right, manipulation outside of the range, and obviously I can see that this is our manipulation outside of this range, right, but inducing with the, inducing SMT with the liquidity, with the liquidity below this low, it makes sense how we didn't run it and then used it later to then form a seek and destroy profile, then to deliver us higher. Some days you'll just have that, and, right, you have to understand when and why it happens and when to protect yourself, right? We took profits here, understanding that the next 10 a.m. 4-hour open high low close needs to play out, especially with news on that day. Right, most days this could be, actually I'm not sure if there was news this day. It was Wednesday before CPI. I don't think it was at 10 p.m. We can check the candle, but yeah, I don't think so. But then the right, lower time frame accumulation, manipulation, distribution into the higher time frame accumulation, manipulation, distribution higher plays out later within that 10 a.m. candle. Right, we weren't able to catch that. We like to usually catch the 9:30 or 8:30 candle into the expansion, right, with a protected low. In this instance, we weren't able to do that, and right, that's just another day in the office. But understanding where our key level was and where our protected lows were put in after our reaction is how you're able to catch the turtle soups. And right, there's different instances where we'll be able to catch into a low, right, but with the SMT, right, and how little of a range we had for the pre-market, right, and note, right, obviously the time-based liquidity, high resistance low pin in below, right, we have at least EQ of the range here as well into OTE, so it's just waiting for a reaction on this day. On the trades that are super obvious and have a more obvious fair value gap, those are the times when we're able to enter those trades on limits, like we saw with the one Asia short, coming into a very obvious SMT below the London low, or below the Asian low into London, right at previous day low. If you guys saw that one into the Discord, having such an obvious SMT like that under a previous day low, when you know we're either gonna need to accumulate back within the range and then deliver higher to then deliver lower high time frame, gives you a good understanding, as well as on a Friday, and then ES, right, had our SMT, and then we TGIF'd. And I just want to make sure it's put in place, right, that, coming from this Monday low, especially reacting like this Sunday, right, souping the Friday PM session and reacting like this and driving us higher into our Monday AM session. Can't remember if we SMT'd, but that makes it even better if we've SMT'd here, right, with our low and then driven higher, then delivering from a Tuesday low. It is very probable to anticipate that we're going to drive to the Tuesday high and deliver a Wednesday expansion. Even if, right, we have an end of week reversal or a Wednesday week of high, I understand we're in a premium here and souping, right, in a premium, but in a lower time frame discount, anticipating right, our time-based liquidity to give us protected lows, delivering, right, from a 4-hour order block as well as a 1-hour order block. And this one was from the 10 a.m. candle, like we saw with the open, high, low, close, and how we left equal lows below, right? But, right, knowing that even, right, this 2 a.m. candle was never reached even with the 10 a.m. open, or excuse me, open, low, high, close. So this key level overall would have treated you very, very well in reacting to it and understanding, right, if we've returned to it and soup these equal lows, even after it's the 9:30 open, right, we still have liquidity above, right, because it's at all-time highs, order flows bullish, and the weekly profile is expansion for Wednesday, delivering, right, like this. Not every weekly profile is going to be the same, so you have to stay on top of it every week. And it's okay to change your weekly bias, right, midweek if it does something that you don't anticipate, especially like on Friday. No matter if we anticipated it to, right, retrace into the 4-hour fair value gap, then deliver us lower, right, we were in a good discount to look for buys and be able to, right, find that retrace back into the 4-hour fair value gap, as well as having an SMT at the lows and souping the lows, right, the market is not just going to fall lower, right, we're going to need, right, good confluences to go lower. A good confluence is accumulating, moving higher, and then moving lower. As we saw here, like I was just talking about, right, accumulating, and even if we expected to come back in this 4-hour range, right, I was in buys here, well, right at previous day low, right after wicking and closing back within the range. The time wasn't perfect, but understanding that it's Asia, right, we're going to get some type of accumulation back inside the range for the closure of the candle. And I knew we wouldn't close, right, with the big with a big black candle, especially with the SMT drawn in at this time. I did get stopped at break even, but it's just because I pulled my break even up too much. But I'll be honest with you, my one target would have been the Asian highs here, and it didn't get hit before we wicked back lower. I had already taken partials and obviously went break even because we've hit EQ of the range, so it's just another day at the office. We have plenty of trades like this where we're able to catch the manipulation in 8:30 news, right, for PPI and deliver higher. So, like we said, another day at the office, and you just have to be ready for that, or, right, stuff like that's going to drive you insane.